Yeah, good evening, good morning, everybody. Hope everyone's doing well. Ed Talaskis here, Random Walk Trading. Thursday, August 17th. This month is flying by. The humidity is insane, but all is good. We had the second biggest drop in the market since, or the second biggest drop this year, I think. So, welcome relief. The bears come back into town. So, free honey, and then if we continue tomorrow, maybe we'll make some bull burgers and free round of beer for the bears. But anyhow, let's get things kicked off here. Get our disclaimer out of the way. And as you know, Random Walk is not a broker-dealer nor investment advisor. This presentation is for educational purposes only. We don't know your situation and what level of risk is right for you. We're not making any specific trade recommendations. The risk of loss of trading options can be substantial, so please be aware of all your risks before placing any trades. Actual P&L can vary and be affected by liquidity, commissions, and slippage. And we can get a link. So we had some of the jobless claims out in industrial economic news, and I think the Trump comments just aggravated the markets, and just markets just kind of melted to the downside, ending on its lows. So that would be considered a reversal bar for your candlesticker chartist folks. Tomorrow we have consumer sentiment. We'll see if we get a continuation of this, or get a doji and move up higher next week. I do anticipate that we continue on this trend, but never could tell. We've rebounded pretty quickly on that last week. North Korea, a little scare or fiasco, and we just have to play it as it comes. Let's take a peek at the market and ending up down 38 points. It's almost like, you know, I used to say like $3.81, $2.62, but down 38 points. I mean, that's just it's just nuts. So ending on this lower trend line in the S&P, down 38, 1.54% to the downside. Russell down 24 points, or minus 1.78%. Index down 2 points, 2.05%, and down 121 points. Trend obviously picking up some steam, and 1.6 on the trend scale. Tick of the Nasdaq minus 294, minus 171. So the bars got a little bit bigger, especially in the last 30 minutes of the trading day. Some real negative ticks here. What we got here, 10 till. That's 350. So we got minus 1272. And almost the same amount on the Nasdaq. So some nice little big bars kicking off there. It could be some end of the day selling or buying, depending what the imbalance was in the markets. But anywho, let's get the trade of the day out of the way, and then we'll go over all the positions. And we had fun adjusting. And an email, someone asking about a company called Microsoft. And considering what happened today, it did fairly well, down 1.7%, or down $1.25. So seemed to have a little support there at the 21-day, and it looks pretty strong as they transition to the cloud. So we put a longer range bullish than this, so to speak, but the question was, they were longer term bullish. So you had IV rank of 60%. The daily chart, like I said, bouncing, looks like are just getting right below the 21-day moving average. And if we want to do like a bullish risk reversal, we can stick with some just simple verticals. Don't have to use butterflies all the time. I do like butterflies. But we can sell the 71.5, 69.5 put spread for 65 cents, and for the same 65 cents buy the 74.5, 77.5 call spread on the upside. Obviously, we are bullish on this trade, but that was the diagnosis. So we're using the September 29th options, and lower break-evens around 72 bucks. We can lose up to $1,000 on the downside, no risk to the upside, and make 1,500. So from a risk-reward standpoint, we could lose 1,000 to make 1,500. So at least 1 or 1.5 is good. But for just a simple risk reversal, doing 5 contracts, this could be a potential bullish trade if you'd like to play Microsoft. All right. So let's go in. And most of the adjustments that we did today were all SPX trades. So I'm going to start. Let's start with the one that expired today. And I'm sure this never happens to you guys either, but let's pull this off and to-do. So the S&P today closed at 2430. Our butterfly was at 2440. That would have been a sweet trade if it closed at 2440. Would have been at max profit, but it closed exactly at our long strike on the butterfly. So, but we didn't. I pulled the trigger early and put a note in the chat room saying, hey, if we break the short strike here, then I'm just going to pull the ripcord and get out, and that's exactly what we did. So, bought back the butterfly. So we got a small $700 loss on this guy. So can't win them all, but just take the money and run, or cut the losses and move on. So this was trade number 76. So that was our first SPX trade. The next one, which is the next week expiration, trade 81 is August 25th. And I'm going to turn some of this off. This didn't happen. And turn this guy off. So again, obviously we've gone through the short strike. On this, this was a bullish risk reversal, and this was a little bit more bullish, but we were mixing it up, and we can lose up to 2,400 bucks. But could have got out, a couple days ago when we were first breaching the short strike, but I like to wait a day or two and then see if we can get to some kind of bounce out of it. Usually we have, but in this case we haven't. So this short spread that just basically bought it back, and it's exactly what we did. And so we're down 937 right now. So we bought it back for 210. Not gonna, didn't wait because we only got a week left for this expiration. So all we got now is that call fly on the upside, and where did it go here? Oh, there it is. Let me just clean this up a little bit. So that was the first adjustment. So we got short, just cut the loss, stop the bleeding, and then while we're down here, we never know. Is this the bottom? We can just bounce back up, and the VIX obviously jumped $3.81. We're back at 15.55. I mean, that's like Christmas time. We'll go for 20. We'll see what happens. IV rank of 45 in the SPX. We haven't seen that in a long time. Russell 48 IV rank. But so we took that off, and then like I always say, if we're down at one extreme or another, what can you do on the other side? And just did a simple call butterfly for 40 cents, and that just basically moves our butterfly a little bit closer to at the money. Now, if we do get some kind of bounce I could sell a put spread. I can do a butterfly. I just have to wait to see what the market does tomorrow. But since we have all we got left is the call side, we can add a put side. But I want to see, either we could do a put spread 132, what have you, to take advantage of the increased implied volatility. But we still got another week left if we get some kind of rally. But if we continue to the downside, we're going to be out 1,062 right now. But we'll see if we can get something to put on tomorrow or something. So we'll see what the market does, and then I'll post what I might think we might add, whether it be a put spread or 132 or just a butterfly, to take advantage of that and increase implied volatility, to see if we get some of that $1,000 back. So that's going to be tight because we only got a week left in this trade. So let me delete those. And next up was a new trade. So normally, like I said, in the past, on Fridays we put on the mini black ops type trade. I ended up putting one on as the market was going down. Let me pull that in here. So this is a new trade number 85, and started out with the call side. So as we're down here, I was looking for a cheap fly to the upside, and I went out a week. I could have went out another week if I wanted some more time, but if we get some kind of bounce, especially after Labor Day, we're right at the edge of the 1 standard deviation, and for $1.25, from a risk reward standpoint, I'll take that any day of the week. But don't know, we could continue to the downside. So with our typical hedge type trade, we got the call side on, and then look for a $4 type put spread on the downside, and looked at the 2380 put spread, 20 points wide, and got it for 350. So if we do continue to the downside, I got some negative deltas, and then I can sell a spread off of this and see if we get this curve up above zero, which we did with the September 1st position. I think we're close on that one. I think let's take a look at that. I'm thinking about it. We had no adjustments with this one, but I thought we're pretty close getting that. Yeah, so this is the one that, I'm sorry, we did make an adjustment. We sold the front part of that butterfly today. Yep, I forgot all about that. So that's what we got checked here. So that's what we had. And if you haven't done it, you'll have some more oomph. You can get more of this put spread. But I thought we might bounce, but hey, that's just take it while you can. So what we did here is this 24.45, this long leg and this butterfly. Obviously, we're in the money now by 15 points. We've got a couple weeks left of the trade, but I wanted, this sea of death here. We got 21.25 at risk. So I want to pull in some monies. So I just did a 5-point spread, collected $1.80 because I thought we might bounce. If we continue to the downside, we can try and go for the $4. So that brought in some monies, and so now we got 12.25 left. Again, if we continue to the downside, I might sell the next 5-point spread down, so we can do that some more. But we can continue to make some money on the downside. But so we made that one adjustment, and we did the. Let's see here. We got. Oh, that's right. We did the. We also did the butterfly on the upside. That's right. Let's lock that guy. So again, while we're down here, I was looking at the upside. Let me uncheck this. So we had this lonely Venus fly. We bought a vertical to make it a little bit bigger, and of course the market goes the other direction, which is fine because we had another butterfly waiting for it. But to try to move this butterfly a little closer to the money, I spent 50 cents times 5, so I spent $250, but it makes it moves the butterfly a little bit closer to the money, so that gives us this. So now we got 24.92. We start making money versus 25.07. So we moved our break-even point closer to that. The money cost us $250. Still not working. Didn't get any of these new trades. The alerts went out. So I just check with the office, Jerry, and make sure that they got your number right and stuff in the system. I don't have visibility to that, but they set that all up and could verify. And I think they could do a test message to your phone as well. So just give the office a call and they'll get you hooked up. So that is the butterfly that we added on the upside, and it moved up. So we got 1275. Of risk, so to speak, in between the two break evens here. So we got a partial Venus fly on the downside, and then we got a little bigger one on the upside. So if we rally between now and September 1st, we'll be waiting for it, and we'll go from there. So that was trade number. What is that? That's trade number 82. So I'll make a note of that. So those 4 adjustments. Yeah, Jerry, I'll ping the office as well, see what's going on. I know sometimes that just for giggles, to reboot your phone. Sometimes rebooting the phone for whatever reason flushes out something on the towers. I don't know if you got AT&T or Verizon, but just as a quick check, if you reboot the phone, they come in, then something's getting buffered or something on the cell tower. But I'm not a guru on cell phone SMS technology, but give that a shot. But I'll double check with the office as well. So, yep. Yeah, and it's kind of this routine is, hopefully as you see more of these, Jerry, you'll get a feel for what we're doing here, and getting this skill underneath your belt and doing this exercise. You'll have your own trade ideas that you want to add, but yeah, we'll get things going. So that is the new trade, or not new trade. That's the trade number 81. So, all right. So Thursday night is butterfly night, and so let's pull up a chart. We'll do Tesla first, and Tesla is down $10.99. Looks like it's bouncing off the 50 almost. So what do you guys think? Let's pick a expiration first. Let's see here. Let's pull up. So we got something in September 8th, so probably the regular monthly options. Tomorrow will be 28 days, so that's September 15th option. So what do you guys think of Tesla up, down, and if you got a price target, great. Between now and September 15th. Let's see what the consensus says here. Ooh, bearish 290. Okay. Down 300. So it looks like majority of you guys are bearish. I'm going to fire up the dashboard here. So we got one lonely bull, and looks like the rest are bears for Tesla. All right, let's see what we got here. Boom. Expected downside move 309. And 309. Let's stick with this guy. Let's try that one first. And we're going to delete this guy. Oh, goody goody. It's acting up again. All right, let's try this one more time. That's weird. It was working before, now it's not, but we'll do it manual, so that's fine. All right, so there's a put fly. Let's get our front and backyard, plus or minus 1 standard deviation. Yeah, a little outside, but we're using the expected move formula 309, so it's not too bad. It says we need to find a way to pay for it. Upside expected move 390. Mm. 360, 370, 380. Okay. And butterfly. That's not too bad. Risk 2,500. Okay. Again, if we're be aggressive, $110. And we try for a buck. So we continue to get some kind of downward move. We can take it and then we can sell a piece of it. So we get this on for 50-cent credit if we get the $110 credit on the call line and we get a dollar debit on the downside. Yep. because the IV, we're at 42% IV rank. 390. We sell a 390 spread. I don't know if it's going to bring anything in. It says 59 cents. That's not half bad either. If we move that in. And maybe move this in. Let's see if we can make that butterfly a little cheaper. 295. Just gonna bring it in 5 points. There you go. So we get both for 80 cents. Kind of like that one. Slightly on the edge. It's further out, so it's, if looking at our two call options or sacrificial lambs, so to speak, 132, we start feeling the pain at 365, whereas the straight call spread is 20 points higher at 395. The downside is we don't get a profit window, so we do have a small profit window if we get it 370, but given the fact that Tesla likes to run at full speed when it does like to run, I'll leave it up to you guys. It's 2,500 at risk, and we can try to get for 80 cents on each side. Again, we can adjust it as the day kind of progresses, so let's if you got an opinion, if you'd like to do the 132 call fly, or would you like to do a simple call spread on the upside, and that'll finance the put fly. And we'll see what the group says here. And it looks pretty unanimous. Looks like the call spreads are going to win, so call spreads it is. So let's see, that's 86 cents. And just for giggles, this is 86 cents. Like I said, 10% is usually a rough rule of thumb. So we take 10% off, it's 78 cents. I'm just going to round it to 75 cents. So we'll see if we get filled at 75 cents. So obviously if Tesla is up in the morning, that'll make the price of the butterfly cheaper, but our overall prognosis is to the downside. So let's put that in there. So we got that for 75 cents. And I'm going to do 85 cents on the call spread. Being a little greedy, but if I want to back off, I'll back off. If we get a big run up, then I may just move the whole strike out 5 points or so. But we have to be careful because the volatility will, if we're going to get some kind of run up in Tesla, volatility is going to drop. We won't get that much juice, but we'll try 85 cents and see what we can get. Let's get rid of this guy. And this will be trade number 86. So that's so there we got Tesla. Boom, boom. All right. Next up, Amazon. what do you guys think Amazon's going to do between now and September 15th? Up, down, sideways, and if you got a price target. Sideways, down. Good. 1, 2, 4, 5, 6, 12, 1, 2, 3. So it looks like 80% saying down. And looks like a little bit of support here at the 950 level. Weekly chart, it's been very loyal, I should say, to that 21-day moving average. It's not hit the 50-day moving average since, well, February 8th. Wow, that's quite an achievement. But I think the party is over. Just my 2 cents. If we break this level of support, then the 200 days definitely in the cards. So let's see if we can find a bearish trade in Amazon. And that is the last week's. And okay, let's see. So we need some bearish. I'm just going to take a peek. So expected move to the downside is 896. And on our charts, looky there, 896. That's almost at the 200 days moving average. Interesting. It's 13 cents, 15 cents, 43 cents. It's a 132. Let's see if we get a Venus fly. Okay, 96. Let's see if this works. Okay, it's working again. I tell you, the gremlins are in the computer. So there is a bearish, a Venus put fly. Don't want to pay $1, but we'll get to that in a second. Now we gotta find $1.39 to finance it. Upside expected move is 1032. But we are bearish, so that's probably bogus. Let's look. 78, 60s. Let's see what that looks like. Man, it's not too bad. Can we make this any better? We got 5K risk on the upside. $1.40. So first thing we do is I'm going to try to move this butterfly in just a little bit. Because we're right on the outside edge. I'm just going to copy it. So if I mess it up, I at least got something in here. I'm going to do two things. I'm going to roll everything up, and then I'm going to move it in a little closer. So let's roll it up first. 10 points. That's that bad. So we roll it up. 855. This is regular. Okay, so moving it closer obviously going to make the price of the butterfly a little bit more expensive, but what we're going to do is squeeze in the short side. So the profit potential will go down, but the cost of the butterfly will get cheaper. So let's pull that in 5 points. And it's $1.60. So slightly more expensive, but let's see. We did a 132. And then we lift up the leg. Do one more time. It's $1.85. I'm gonna stick with the Venus. That Venus find looked pretty good. So that's $1.60. So here, this one was a 20 cents difference. Gets us a little bit closer. So I'm going to do that. Maybe we could be aggressive, if we get some kind of bounce. And again, on the call side, maybe go for more credit. So we're going to do it two different ways. One, we're going to try to get a cheaper butterfly, say $1.50, and maybe $1.75 on the call fly. So let's see what that would look like. And $1.25 credit. We got downside, upside break even in 1,005. So oh, Joe wants to look at a call spread. Yeah, we'll look at a call spread. So we need $1.50. So we can at least go to our dashboard. So we need $1.50. So 915, 905. Analyze opposite. And turn off the butterfly. And I did puts instead of calls, but no wonder it looks so good. Call side did, call side. Need $1.50. $10.15, $10.25. $1.60. $2. $1.25. 1005. Let's look at that guy. 5-point spreads. Let's look at that one. All right. Okay, so Joe, there is your call spread. So you can get it, get 5,000 in risk, or we do the butterfly. It's a little bit closer, 48.75 in risk. So we can take a ask the audience poll from our Who Wants to Be a Millionaire show. You guys like the butterfly, or you want the credit spread? Yep. Okay, sir, we'll look at Priceline when we get done. It looks like the butterflies win this one. I tend to agree. You almost, yeah, you got 5,000 in potential risk, but you also got a potential to land in the bullseye with the butterfly versus, the straight call spread is a straight loss. I mean, once you hit that 10-15 short strike, then you're going to start feeling some pain. Yes, it's 15 points further out of the money, but I'd rather have a little chance of something. The other thing is if we do get some kind of break to the downside, we can add a butterfly on the upside and try to eliminate some of that risk. But I tend to agree. We could be, like I said, aggressive with these entries, 175 and 150, and see if we get filled. So just for giggles here, and $1.60. Again, if we get some kind of rally tomorrow, this will be obviously cheaper. So I'm going to put it in. So $1.50. Let's try $1.25. So we get filled at $1.25. I can always adjust it later, but. Yeah, on the call side, same thing here. So it's going for $1.45 credit if we get some kind of rally to the upside. I'm gonna try we'll put in for a $2 credit. If we back off, we can back off. So. And with this one, I'm just gonna put a contingent in here saying it's only gonna submit it after the first hour. Didn't do that on the Tesla one, but. So this will go in after the first hour, or amateur hour. All right, so that'll be trade number 87. So we'll see which ones get filled. And let me save that. And there is that trade. Okay, Sarah wants to revisit our Priceline trade sheet. Are you still bullish, Sarah? Yes. Yeah, I think I dropped again today, and I thought that we talked about if it got close to the 200-day moving average, that might be a good place to look. Let's pull up a chart. Yeah, another 42 points to the downside. That'll do it. I say it's higher volume, yeah, and it definitely would say it's it's got some support here at 1813, so it could bounce off this level because you can see these multiple hits off this price level. A lot of consolidation before it kind of ramped to the upside. Oh yeah, still got our trade in here. Yeah, look at there. So these guys, yeah, we did, I think, a simple call spread, and it is for giggles. Let's see if we can find, yeah, because you're a little bit outside now. Obviously, with a 42-point move to the downside, that'll do it. Maybe we can reevaluate the strikes for you. See if we can get this a little bit closer. All right, let's see what we got. Butterflies. Oh, I'm going to change the expiration too. All right. Okay, so on the call side, those are 10 points. All right, so Venus fly. And yeah, I don't know if it's you, Joe. We thought was the 2000 level would be a nice place to kind of hang out. So it looks like 1993. It was a good year. $5, $10. 1993. Take a look at this one. Don't know if it'll work, but yeah, see, it worked earlier. Didn't work now. It's like saying, oh, your kid's got a cold and you go to the doctor. The doctor says, oh, there's nothing wrong with him. He's fine. Walk out of the parking lot and he coughs up or whatever. And, all right, so let's try this again here. So I'm just gonna leave that there. We'll copy it. Turn him off. And it's 19. I copied the wrong trade. I want the calls. Sorry. Leave the puts. So 1990, 2040. It's almost the same strikes, except 78 cents. Yeah. Extra 30 cents. That's 5,700 in risk. Oof. 2,800, $1.42. So that's, yeah, it's pretty much where we were at. Did 132. Yeah, yeah. Good point. Yes, sir. I think just maybe just stick with the original. Just if you get a good price, or if you want to move it up, but you know, see if it continues to bounce a little bit more, and then play it out. Sure. Alrighty, folks. We'll wrap it up tonight. Be working on the spreadsheet over the weekend. Hopefully, get that thing fixed for everybody. The old one's working fine. It's just some of the new features. The one that just came out, the new features are playing havoc with the old one, but the old version's perfectly fine. So if I see anything, I'll post it in the chat room. And like I said, we'll follow up on Sunday and see how how things played out tomorrow. All right. Have a good weekend, and we'll talk with you guys later. Thanks.